All right, good morning, boys. It is 2:30 a.m. and we just wrapped up another beautiful trade. It was a 2.85 risk to reward, and yes, I took a previous trade before that. So I made a bit under $900. I think I made a roughly around $900. So my first trade I lost 200, and my second trade I made like 1.2 or something around there. But yeah, I was kind of stressing the whole time trading today, especially with all of the volume and everything we had today. So trade was good, but like mentally I'm exhausted and all this shit. But yep, I guess that's what you get when you trade during tariffs and all this shit. But I'll quickly talk about the trade recap in a tiny bit. Anyways, boys, so this is the trade that I took today. Now, like I mentioned before, this was a fucking stressful day. Like, I didn't want to not undermine. I didn't want to overshoot how stressful today was, but like it was like extremely stressful. So let me just quickly talk about what my daily bias going to the day was. Like every other day, right, 30 minutes before market open and all this stuff, but surprisingly, right, we were bullish initially, right, and why we were bullish? Well, initially, I thought we wanted to fill up this daily fair value gap, but my main draw for any like bullish retracement was into the retracement. I mean, sorry, into the equilibrium of the swing high to the swing low, right, of this daily move, caused by these two humongous candles that Donald Trump has caused us to have, right. And straight after that, right, as soon as we hit equilibrium, I was looking at ES because we hit equilibrium, right. This was honestly a very good trade, right? But it was just took a mental toll on me. We had the 1 hour SMT, and in order for any SMT to be validated, right, it needs to take out hourly lows. So hourly low here, all of these hourly lows I expect to be taken out, right? Because of this 1 hour SMT. So not only did we have price hit daily equilibrium in one session, we also got the hourly SMT during New York time, right? And this was sort of more like a PM trade because I did take it pretty late. So initially, right, there was a good opportunity up here where the 5 minute break formed. Then usually I would scale into my 1 minute confluence and confirmation. But I didn't do that because we didn't close yet on our 1 hour SMT, right? We only had that here at 11, and by the time that happened, we already made the move. And when this was happening, I was like stressing, right? I was like, fuck, did I really miss out on a fucking another trade? Because I don't know, bro. It was stressful, but that's why I took this initial first trade, which was a pretty shitty trade, right? I was just looking for any basic retracement, and the only retracement we got was into this 5 minute fair value gap here, right? And I just took the trade based on this closure, and I aimed for these hourly lows down here, which, right, we didn't end up hitting, so we lost roughly around $200 here, like I mentioned before. But what we did get, right, so another opportunity was this 15-minute fair value gap being respected. So after this 15-minute fair value gap got respected, scaled down into the 5 minute, right, just the usual. We had a breaker structure. I mean, no break. We had a inverse 5 minute fair value gap here, right, and then I was looking for a 5 minute retrace. The reason why I wasn't looking for a 1 minute retrace into this area was a few reasons, right? On the 15-minute time frame, right, we had this fair value gap being respected, right? So if we were going to scale all the way down into the 1 minute time frame and take the trade based on that, the likelihood of us getting taken out would have been a lot higher because this is a 15 minutes sort of like a higher time frame confluence, right? So like like a move like this was like 0.4%. And if I was to enter on the 1 minute, firstly my risk to reward wouldn't have been as high, and it would also be a lot riskier, right? I wanted more confluence because not only were we not trading in our normal time of 10:30, right? We were in PM session, number one. We already made this initial big move down here, number two, right? And there was just I just didn't see the 1 minute time frame being useful here. Or it could have been useful if you timed it perfectly, but I wanted more safety rather than a sniper entry, right? Because our high time frame biases were so high confidence, you could say. So basically, tapped into this 5 minute fair value gap, and I just entered right there. I didn't wait for any 1 minute time frame because we already had all of the high time frame confluences. We had our 15 minute fair value gap being respected. We had a 5 minute inverse fair value gap, and we also had another 5 minute tap into our fair value gap, right? And my draws for the day, so I was pegging my TPs with ES, right? I mean with NQ. So NQ, this hadn't been filled yet. This huge ass candle just formed. But this hadn't been formed yet. But ES hadn't even tapped into this fair value gap. We didn't even take out this hourly low till like when was it? That was like 30 minutes ago, right? So that was my first draw because why was I targeting that? Because usually after you sweep hourly lows, you get a slight retracement, right? And with any low time frame entry, a high time frame retracement, even though we're going in the same direction, can easily take you out of your trade, right? So as soon as we got that, I was playing it safe today because we had so much volume already, and all this stuff. So as soon as we got that, and as soon as we filled up this fair value gap here, or tapped into the endpoint of this hourly fair value gap, I just exited at a 2.85 risk to reward. Now I could have obviously made a lot more money down here, which was my initial TP, but there's a few reasons why I didn't want to continue the trade to down there. Number one was again, this isn't my usual time. Number two, we had so much volume before, and number three, I was scared of that retrace, like I mentioned before, which we didn't really get, because bearish order flow is just so high right now with all the tariffs and stuff. Now, am I upset that I didn't, keep my trade all the way till down here? Obviously, it would have been a lot nicer to hit a 5-to-1 risk to reward trade, but like I always say, right, don't get hurt over spoiled milk. Or I don't really say that, but I've heard that from somewhere. So yeah, don't get hurt over spoiled milk. Like yes, I could have made significantly more money, right, if I held this trade. I would have probably taken so I entered 7 contracts, taken 4 out here and taken another 3 here. So that would roughly have been just off the top of my head, like 1.7, 1.8. So it would have been a good chunk of money, but at the end of the day, only take or like at the end of the day, you need to play by your own rules, right? And I was already pretty tilted and also pretty upset that I didn't take this initial trade. So making any money today was a big plus for me. Now my expectations for market, I think we're just gonna keep shitting the bed all the way down till here. But that's for this next segment. So I'll catch you guys in a tiny bit. All right, boys. It is what time is it? It is 3 o'clock right now. And I'm just going for a little walk to Macca's for two reasons. Number one, because I'm a bit hungry, and number two, I just think from all the adrenaline from the trade that I just took and the session that I traded in, I think best thing for me to do is just to walk it off and just to reflect about the trade, and how I performed, and to calm myself down a bit because yeah, over the past 2 days, um, especially yesterday when I was looking at the screen when Nasdaq literally turned into a meme coin, like never seen that in my time trading. But I haven't been trading for that long, to be honest. But I'm just gonna give my take on what I think about all of this like volatility and all these tariff talks on trading. Right, two things. Right, not financial advice. I'm just gonna chill here because walking's tiring. But two things. This is not financial advice, and number two, I'm not really educated in this. It's just my assumption of it. But historically, right, every time there's a big dip or there's a big drop in the market or like some crazy fear that the world's going to end, right? Whenever there's a small drop, or not a small drop, a slight pullback to the market, there's an even bigger, right? There's an even bigger push. And I think over time and historically, right, that's always happened. So number one, If you guys are panicking about the market, don't panic. If you have investments, don't look at it. Just sit on your fingers, right? Because at the end of the day, it's all paper losses unless you sell it, right? The thing you shouldn't do in times like this is sell your investments or whatever. And how this affects trading? Well, obviously, volume equals better trades, right? That's correct in one sense, but secondly, it's a lot easier to get taken out these days. Like all of a sudden, 1% movements in like 5 minutes is deemed as normal, right? We're moving 2, 3, 4, 5% each time market opens, right? Which is deemed as normal right now. So remember to de-risk yourself. Remember to, you know, always be extra sure with your trades, and just be careful in the market, because you can make a lot of money, but you can also get taken out a lot easier. Sorry. And I think, especially with yesterday, what we saw, right? Market moved 20% in volume, which is unheard of, right? Because of fake news and all this stuff. And it's not right. I want to be optimistic. It's probably going to get a bit worse, or it's probably going to get worse before it even gets better. So I think for all you traders out there, just strap yourself in for a very, very fun and volatile time, but just be careful with your trades. And with that being said, I'm going to end this video for today. I hope my insight helped you guys a tiny bit. Not financial advice, remember. I'm not qualified, right? I took economics in high school, right? I did like an economics course in university. But yeah, stay safe, boys, on the market. Don't blow your fundeds. Don't lose too much money. And we keep trading. I'll see you guys in the next video.